Hey, what's going on, guys? It's Ricky with TechBot Solutions, and in the next couple of minutes, I'm going to be talking about how I manage my risk accordingly and my overall position size when it comes down to trading in the market. So I really hope that you guys enjoy this video. Again, my name is Ricky. I run the largest YouTube channel and the largest private Facebook group for those who invest in the stock market. If you want to join our free Facebook group of over 182,000 members, being the largest one out there, be sure to click that first link in the description to stay connected. So I'm going to start showing you my screen, and I want to give you an example about my $3,000 day today and how I was able to successfully close my $3,000 day. What I wanted to talk to you about is the way that I progressively become a little bit more conservative throughout the day as I get closer or exceed my overall profit for the day. And again, the reason that I'm making this video is because I touched on this topic very briefly in today's earlier video when I did a recap and I was up about $2,500 on the day. And I had a huge focus talking about only taking advantage of opportunities that offered a larger margin of profit. So when it comes down, just to put into perspective, market open or when I'm trading during pre-market hours, again, it's a fresh day, I'm starting at zero, and the thing that I mainly focus on is, making sure that I understand the direction, making sure that I understand the pattern, making sure that the opportunity cost is worth it. But I sometimes go for margins of profit that can be as small as 1 to 2%. So maybe like 1.5% would be something that I would go for. And now a question as I progressively make more throughout the day, like let's say after 2 hours of trading, I'm at $1,000 for the day. I become a little bit more selective and conservative as I go throughout the day because I don't want to give back some of my profit. One of the things that I experienced today, again, the only ETF that I traded today was ticker symbol DGAS. And you guys can see that right on over here. Again, $3,018.53. We absolutely killed it. And the really cool thing about this was that very early on, I identified kind of like this resistance around 122. So although it did exceed 122, it nearly hit highs of 124 as of today. But I understood that as it broke above 122, DGAS became a little bit more on the overbought side. So the potential for that to continue to uptrend after 122 to 124, there was a higher probability for that to pull back than, in my opinion, to continue to uptrend. Again, I was already up $2,000 and I just didn't want to risk it, right? So as the morning started, I was okay with scalping the 1.5% to maybe like 2.5% margins of profit. Again, I'm trying to make as much as I could in the very beginning. So I'm a little bit more aggressive. And again, this isn't a suggestion. I'm just telling you what I did this morning. Now, as the market opened, we saw it sell off. We got rejected at around 122, and then a huge sell-off happened to about 118. And that is where, again, I wanted to be patient for a larger margin of profit. So this is going to be the most important part. I'm up a decent amount on the day already, right? And I see DGAS as of today, it was trending up, but it experiences a pretty aggressive sell-off. I called it out if you're part of Learn Plan Profit. I called out that natural gas was extremely overbought and so was UGAS, and that it made sense based on previous patterns, and I want to show you this, based on previous patterns on natural gas and how it was trading during pre-market hours. Every time that it would get close to or near to the 2.99, which is around this area right here, it wouldn't hold for a very long period of time. So because of that previous pattern, I made the assumption that, hey, it's most likely bound to pull back, meaning that if natural gas pulls back, that means that then DGAS will recover. And again, DGAS was one that was actively and progressively trending up during pre-market hours. But as soon as the market opens, it experiences a sell-off, and then it becomes in this good deal range. It's not like I'm trying to buy it at around 122 and try to sell it at 124. It literally sold off back to its pre-market support, so it built this margin of profit. And again, the whole premise of this video is to talk about the importance that as I hit my daily goal for the day, I became that much more selective and just conservative. So I didn't just jump on any position because it offered maybe 1 or 2%. I wanted to make sure that if I took advantage of an opportunity that it offered a much larger margin of profit, that the risk or trade would be worth it. Does that make sense? So again, I just don't want to give back any of my profits. I don't want to overtrade. And one of the things, most importantly, is that I don't want to end up in the red. So what I did was I waited for a pullback. I waited for it to build that margin of profit. So this is something that we've talked about a lot within the Learn Plan Profit group, and it's allowing you to build that margin of profit as a stock or ETF sells off, right? As it corrects itself, it can continue to sell off. One of the last things that you want to do is try to predict a reversal. So once I saw it really begin to consolidate right around 118, I calculated the margin of profit that I had to offer. Again, it wasn't an absolute huge amount, but it was a little bit over 3%. That was somewhat attractive to me. And again, if I managed my, my risk 1% loss with a 3% or 3.5% margin of profit, that was a day trade that was kind of attractive to me. And one thing that I noticed is, I got in at a perfect time. I added more to my position when it started showing signs of an uptrend. So what I normally do is I don't average down. That's one of the, I think, worst things that you can do as a trader, adding more to a position that's selling off. One of the things that I personally did was I progressively added more to my position as it continued to show signs of an uptrend. If something is making you money, it makes sense on why you might want to continue to add to it if it's still a good deal. And that's essentially what I did. I waited for the confirmation of the reversal. It went from trending below the EMA to pushing up above it. And then as it approached the middle VWAP, if you're part of TechButt Solutions or if you're part of Learn Plan Profit, you would have seen my call out that I locked in profits at that 118.60 if I'm not mistaken. And at that point, again, I locked in profits. It pushed me a little bit over $3,000. That's where I closed the day, and guess what? It continued to uptrend. It hit highs of almost $24, and again, that's an additional 3%, and I get that. I left a lot on the table, but the whole premise of this video is understanding when it's okay to walk away. One of the things that I just want to remind you is if you're always going to bring yourself down because you left money on the table, again, when it comes down to the emotional part of trading and investing, I just think that is a huge part that a lot of new traders have to refine. And it just always brings up that question, right? When you lock in profits and something continues to uptrend, you're like, oh my God, like what, I should have just held a little bit longer. All I focus on is there a reason on why I bought and why I sold? And does that make sense to me? If there is, then great. If it continues to uptrend, all power to you. If I want to choose to get back in and I see the risk to be worth it, again, that's a risk that I accept. But if I see that it continues to uptrend and it's not a good deal and it's overbought, but it continues to uptrend and I have FOMO and I feel like I left money on the table, I'm gonna slap myself back into place, because again, if I'm greedy, if I'm someone that wants to really cry about every single cent that I leave on the table, this is just something where you're going to most likely go from being green on the day to giving back all your profits and eventually being red on the day. And again, discourage yourself because of all the time that you invested in trading whatever it is that you were trading. Again, long-term goals, not short-term, just satisfaction. That's, I think, going to be our main focus for 2019. I've been trying to make much more helpful videos sharing mindset and best practices when it comes down to trading in the stock market. I have a pretty conservative approach. I tend to be a little bit more aggressive or risky as the market opens, as I'm trying to hit my daily goal, but progressively as the day goes on, because I don't want to give back any of my profits and because I want to consistently stay green, I either do one of two things. I become more selective with what I choose to trade, or I just simply walk away. If I don't see that the market is there and it's not worth my time, then the opportunity cost just isn't there. And that's something that you have to be okay with. And if it's not, again, it's just something that you have to practice and become a little bit more familiar with. So again, I want to thank you guys again for your time. I really hope that you guys enjoy these series of videos that I've been making, at least for the past couple of weeks. They're a little bit different. If you guys do, please give the video a thumbs up. If you guys haven't subscribed already, we'd greatly appreciate it. I also do want to remind you that if you want the opportunity to watch me trade live every single day, click that second link in the description. It's called our Learn Plan Profit Group. You get to work with me every single day. You get to watch me trade live every single day, and you get to ask me questions in real time. Thank you guys again so much for your time. Continue working hard, continue following your dreams, let your passion be what drives your success, and like always, let's make sure that we end the year on a green note. Take it easy, team.